Is Bitcoin too volatile to be money? Its volatility has dropped from around 250% to less than 50%. Meanwhile, fiat currencies keep losing purchasing power. Stay tuned to discover why being a store of value is more important than just being a currency.
Moving on to thing number 3, and before we do that, head over to deepknowledgeinvesting.com. Check out our premium subscription, $100 a month. That'll get you access to the full portfolio, buy, sell orders coming from Gary, research topics, exclusive access to board of advisors who we mentioned earlier, companies as well. You could always sign up for a free subscription. Also, that'll get you added to our mailing list. You'll get this written version of the 5 things delivered to your email and a bunch of other good content that'll come out that is not gated. Would love for you to join the DKI family in that way. It costs absolutely nothing. We got a lot of new fun stuff coming out, AI related products, the Ask Gary feature on the website getting a revamp, but that's easy to use right now. And you can always email us IR at deepknowledgeinvesting.com. We're shifting to Bitcoin on this week's version of the 5 things to know in investing. The chairman speaks issue. Gary, Bitcoin, we're talking volatility. I know you had a thread on X over the weekend that I think got some legs and going. So just a bunch of growth all over the place. So that was exciting for me, the marketing guy, I guess, right? But Gary, thing number 3, Bitcoin volatility and the path to becoming a currency. Exciting stuff. A lot of good names going to be thrown around here as well with a lot of good insights.
Yeah, so it was kind of fun seeing this thread on X. It did get a lot of attention. It got hundreds of thousands of views, hundreds of likes. Really nice, great retweets from the people at On-Ramp Bitcoin, Lawrence Leopard, Lynn Alden. And the issue, I think the reason it got so much attention is it addressed an important issue. I regularly talk to people who say there's no use case for Bitcoin because it's too volatile to be used as a currency. And, they ignore that it's becoming a store of value like gold and ignore the flight to Bitcoin in countries with extremely high inflation rates. It's really easy to say, well, it's volatile in dollars. But, if you owned Argentinian pesos pre-Mili, or if you were in Lebanon, Bitcoin was your escape hatch, and Bitcoin wasn't volatile in those currencies. So they ignore all that. Listen, I don't agree that there's no use case, but I do think that it's really important that if we're going to be persuasive, we have to address the arguments being made. And Bitcoin has been volatile versus fiat, and prices tend to be posted in fiat, and so that adds to this perception. But the problem with that argument against Bitcoin is that it's static, and you should look at the dynamic picture. In this case, we had new star intern Gideon Rodham, who is a math major at Dartmouth, and we had him run the correlations and the volatility. And we posted a bunch of charts on X. We included 2 of them in this week's version of the 5 things, but we posted the daily volatility by year. And if we go back to 2010, when Bitcoin first started trading, it was 14%. And then it dipped. It was back up to 12% a few years later, and then trended around 4 or 5%. And that daily volatility is now down to right around 2%. Now, somebody might say, well, wait a minute, 2% daily volatility, that's a lot. Sure, it is, but it's down from 14%, and it's down from 12% from, a decade ago. And it keeps falling as we get a higher market cap and greater institutional adoption. So I think, these are things worth looking at, and I expect that trend will continue. The other chart that we posted was the Bitcoin price versus the purchasing power of the dollar. And the Bitcoin price has skyrocketed, and it's done so in a volatile way, whereas the dollar has lost value very consistently and slowly. And, since Bitcoin started trading, the dollar has lost roughly 1/3 of its purchasing power, 1/3 of its value. That's just since 2010. And that's, by the way, if you think the CPI is accurate. I don't. I think the CPI is understated, which means you've lost well over 1/3 of your purchasing power in that time. So, I think that a lot of these arguments related to volatility they're just looking at yesterday, and these things should be forward-looking discussions.
Crazy just to hear you say that, right? And how often people just get stuck in what happened in the past and yesterday versus, yeah, you got to be forward looking with everything that is happening. And I mean, even speaking to our first point on what's coming, with the Fed's position, etc. And then, okay, so Gary, to break this down, and the charts do it really well, so really encourage you, head over to deepknowledgeinvesting.com. Just give us your email. We'll send you over this version of the 5 things later this week. So it looks like Bitcoin's volatility obviously has reduced dramatically. What's the best approach here, right? And we know we've been talking about, hey, the dollar's purchasing power. That was one of the things that I always talk about with people, to just kind of, hey, we don't know if Bitcoin's going to be at 50,000 or $1 million a month from now. But what we do know is that the dollar's purchasing power is going down, right? I mean, that's the most simple way I can put it, and I don't know what your argument would be on the flip side of that. So, Gary, what's our approach here? And again, I highly recommend everybody go grab a copy of the written version so you can see all these graphs. Check out Gary's thread as well on X. But Gary, what's the approach?
Yeah, so I think there are a couple of things, a couple of ways of looking at this, Rob. One is, people are saying, hey, wait a minute, that you've got like 50% volatility annually. Okay, great. But take a look at the price vol of the Magnificent Seven or various commodities. We just talked about copper moving 17% in a week, right? And yet they don't face those arguments. Everyone's fine with NVIDIA and Microsoft. Those stocks are volatile. They move more than 50% in a year, and it tends to be up. Hey, guess what? The same is true of Bitcoin. All right. But anyway, I would just make 2 points on this. I thought there were a ton of great comments on the thread on X, but my favorite of all of them came from Lawrence Leopard. He wrote, actually, it's the dollar in Bitcoin terms that's quite volatile. Bitcoin is stable. And I think that's a brilliant way of looking at it. And it's actually similar to something I say about gold, right? And I've owned gold for 5 years. It's more than doubled for me. And for DKI subscribers. So that's great. But, people say, oh, well, gold is up. And my response is no, gold's purchasing power is roughly stable. It's the dollar that's losing purchasing power, right? We're gaining in dollar terms. And so again, earlier in this episode, we were talking about, how do you make money where the Fed is cutting rates? Well, this is one of the ways to do it. And you have to think about these things in the right way. We're positioned for that. But, for people who are still uncomfortable with this, and I understand why you would be, I'm just going to leave you with one question and really just think it through. My question for you is, do you want to gain purchasing power with high but decreasing volatility in Bitcoin? Or do you want a 100% guarantee of losing purchasing power slowly in the dollar?
Great question and great way to put it. If you agree, disagree, leave it in the comments. Let us know why. Would love to see the flip side of that argument played out. But yeah, Gary, I mean, I think it's an absolute no-brainer, and we've just seen it consistently play out, as you've mentioned, over the last 3-4 years since you've been talking about these things. So again, head over to deepknowledgeinvesting.com, grab that free subscription. That'll get you the written version of the 5 things that'll get fired out later this week to free subscribers.